I was driving in this morning. I was trying to remember. Has it ever been this volatile in the last 30 years that we've worked together?
Well, clearly the financial crisis and the dot-com thing. It's just what's so fascinating about this one, it feels like self-induced. It's like ever since Liberation Day, the markets have been going crazy. And we're recording this on Tuesday, what is the day today? The 22nd of April.
So we know.
And so as of right now, the market's up a little over, the Dow is up a little over 1,000. And
yesterday it was down what?
About 1,000.
Yes.
And one thing we need to remember, as the markets go higher and higher and higher, the numbers as a percentage of your portfolio mean less and less. So,
but it's still 3%.
Yeah, 2 to 3%. Yeah, it's pretty big swings. That's
a big swing on a daily basis. There's no question about that. There's a big swing, and it does feel a little bit self-imposed. This Jerome Powell thing is really.
Well, you mean Trump called him a total loser? Is that what it was? He sent out in a tweet on total loser.
It's.
I mean. I don't know. Even the diehard MAGA can't think that's a good idea to put out on a tweet
that the
Fed chairman's on a total loser.
Yeah, I don't think you're garnering friendships.
Well, I think that's what's which it's so like we really try to stay away from politics on this program, and primarily because we don't think this is the avenue.
And historically, that whether it's a Dem or Republican in office, it has no statistical significance whatsoever
right.
on the
over the last 100 years, roughly,
on the outcome of your portfolio, not on the outcome of your tax planning.
That's right,
but on the outcome of your investment portfolio.
And short term, it could be all over the map. And I think the reason we're seeing the volatility is the uncertainty, and day by day, it's like what's happening and.
Yeah. Are they coming to are other countries coming to the table to negotiate?
What does that really mean?
I don't know. We don't know. I don't know. Yeah.
We don't really know. We get a tweet every once in a while.
Yeah, they say
it's beautiful
maybe
or something.
But nothing's been really announced. Like Vietnam hasn't come and said, okay, this is what our trade policy looks like with the U.S. Right? That's what
we try to stay out of politics, but the reality is this market volatility is a direct response to the political environment today.
100%.
Yeah.
But this too
shall pass.
This too.
And every downturn in the market looks different. This time it's different is true. It's always a little bit different. Every time there's a recession, there's different causes for it. And anytime there's a bear market, a 20% decline or more in the stock market, it's a different cause.
But one thing that is always the cause is uncertain visibility into the future.
People get scared.
And they react.
We're humans. Even professional money managers are human.
Yes. Their jobs depend on it. And so sometimes they emotionally react. And it's very, very difficult. So I was talking to my, who was I talking to? My brother about this is what the risk premium. This is what it's
why you make more than you would in, say, a money market account.
This is the risk premium. You're paying it now. You're not paying it when you're making money. You're paying it when you're losing money. That's the risk premium. Right?
And it is so tempting to say, why don't I just get on the sidelines and wait till the dust settles?
Let's just wait. Right? Nah. Even going into the market, if you're a little worried, just go in tranches. You don't have to go in all at once, but you can go in tranches.
You mean if you have cash to invest?
Yes.
I think it's the people it's most challenging for right now, by and large as a group, and this is a very general statement, but it's those that either have just retired or are just about to retire.
I would agree.
And probably even more so those that have just retired, because once we retire, we have more time on our hands. We can sit and look at our portfolio all day long and run all kinds of calculations.
We can actually pull it apart, look and say, well, if I didn't own this, I would have done X. If I owned this, I would have done Y.
That's right.
Right? It's easy. I just remember years ago I met with, it was, 28 years ago. With those, we need those sound
no, we don't need sound. No, I'm glad we don't have sound effects
in the background.
No, I'm glad we don't have that silly stuff.
So he never became a client, but he said to me, Pat, it's not that difficult. He said, all you need to do is buy those things that are going to go up in value and not own those things that are going to go down in value.
He's a fool.
Right?
That's a definition of a fool. I'm sorry.
Yes. But it's not that easy. It just isn't that easy, right? Because the market over the short term is driven by emotion. Over the long term, it's driven by earnings.
Correct. So right now, we don't really know how this is going to impact earnings of companies over the long term. And one thing I think, what else is different this time, and let's don't discount the tailwind we have by the AI transformation that is occurring.
Thank you.
It feels a lot like Internet 2.0. Like first it was the .com, we had pets.com, and some of the it was just like
whatever they could sell.
But then companies figured out, like Amazon figured out, how do we really create a business model off the internet, and it's transformed business. And right now, when you look at the things that are happening with AI, I think just even within Allworth, the technological improvements we've experienced in the last year or two, and making our advisors that much more efficient.
It's crazy.
It's kind of nuts. It just, and how it's coming fast.
Yes. Yeah.
So
and things that were really super mundane, right? Time consuming, tax returns. Right? Tax returns. AI can do the simplest tax returns now, but as it learns, it will be able to do
that's right.
the most complex tax returns.
And complex financial planning.
That's right.
I was talking to a friend. He's the chief marketing officer for a relatively large company, and he talked about they did some secret shopping. I think they hired a company to go out and secret shop a bunch of their competitors. And he said he got all these different reports, and he says, "Oh my gosh, it's going to take me hours to kind of decide." He said he put it all into I don't know, it was ChatGPT or one of the ones similar to that.
To summarize?
And he said, like, in 2 minutes, he got this just beautiful summary. I mean, he said, literally, this would have taken me 3 to 4 hours.
And just
now
boom.
It's immediate.
Yes.
But I mean, I just look at it.
There's tailwinds. There's absolute tailwinds.
Tremendous amount of tailwinds. And I think it's important that we remember that as well, as because we can get pretty concerned and freaked out about the current markets. And let's think, I don't think human nature's changed all that much. And either the country is not going to set aside and watch tariffs destroy the marketplace.
Yes, it's just not going to happen.
No, and there's lots of checks and balances and I don't know too many people that are terribly excited about all these tariffs.
I will reserve judgment.
I'm not asking your opinion.
Oh.
I just said I don't think there's
I think that there are people that are excited about these. I disagree with you. I think some people are very excited about these tariffs because they feel that the U.S. has been taken advantage of for years and years and years. How they are instituted is something completely different.
Let me rephrase. Most people that have accumulated significant wealth.
Okay. Thank you.
Most of the people we're talking with, I think.
Okay.
I'm not so excited about the tariffs.
Okay.
And how it's happening. What's going on?
Yes, and the effect on their portfolios.
Yeah.